I'm Rick Kahler. Thanks for joining me. Even for those who are devastated by the recent election results, there's some positive aspects to consider when it comes to taxes. The unanticipated sweep of the presidency and both houses of Congress by the GOP is likely to change the direction of some federal tax policies. One of these changes is the probable fate of the Tax Cuts and Jobs Act. This is called the TCJA, which Republicans created in 2017 and which was set to expire at the end of 2025. And that's almost certain to get a lifeline. The 7 tax brackets and increased standard deduction, some of the TCJA's most popular features, will almost certainly stay. Now, that's good news for anyone who appreciates straightforward savings and a bit of stability, because there's not the instability brewing that there's been around the end of this particular act where the taxes would revert back to what they were 10 years ago and all the complications, especially estate planning associated with that. But as with all things tax related, it's not all going to be smooth sailing. The $10,000 cap on state and local tax called SALT deductions, a particularly sore spot for those in high tax states like California and New York, could become a major sticking point. Trump has hinted at scraping the cap altogether, which is kind of a surprising move given that he signed it into law in the first place. However, the SALT cap also has defenders among Republicans who enjoy seeing higher tax states shoulder more of the burden. So a compromise like raising the cap or trying to tie it to inflation seems a lot more likely than a full repeal. Even here, there's an overlooked bright spot. Pressure to adjust the SALT cap could encourage broader discussions about fairness in deductions, and this might even potentially lead to relief for middle-income households feeling squeezed by rising local taxes. Now, for families, there's a potential win on the horizon with the child tax credit. While it's currently capped at $2,000 per child, there's bipartisan interest in boosting it closer to the pandemic era high of $3,600 per child. Expanding that credit might not solve every problem, but it's an acknowledgement of the financial loads that families carry. Given the cost of raising kids, as many of us know, any extra cushion is bound to be welcomed with open arms. For business owners, the Section 199A deduction for pass-through entities, think about LLCs and S-corps, could see enhancements, especially if corporate tax rates are slashed from 21%, which is where they're at right now, to 15%. For smaller businesses, keeping and possibly expanding this deduction could mean hiring new employees or holding back growth. Some owners of businesses that are not currently C corporations may consider switching to C Corp status. Then there are the president-elect's more unconventional proposals, such as making tips and overtime pay tax-free, eliminating taxes on Social Security benefits, even replacing the income tax with tariffs. While these ideas grab headlines, their practicalities are pretty questionable. Now let's take tax-free tips. It could help workers, but might have unintended consequences like encouraging employers to slash wages and encourage higher tipping. Eliminating taxes on Social Security, well, that could be a boon for retirees, but the revenue shortfall may be offset by tariffs. This could significantly impact both retirees and middle-class households. The Congressional Budget Office estimates that tariffs could add an average about $1,277 annually to household expenses. And I've seen some projections exceed an estimate of $4,000 for certain families. So even with uncertainty, the TCJA's extension will likely dominate the next legislative session. And with Congress needing to act before the law sunsets, taxpayers should prepare for a system that looks familiar but includes a few surprises. The next tax bill may not overhaul the system, but it's bound to have ripple effects like all tax bills do on household budgets. So whether you are elated or disheartened by the election results, one thing is clear. Tax planning just got a little less foggy. And in these turbulent times, there's value in having some idea as to how we prepare for what's coming next. Thanks for listening.